Hello, YouTube. Casper here. How are you doing on this Monday? Markets has just closed, so we will do a quick Twitter recap. The charts are, some of them are from this Friday, because basically I was not at the PC for the entire weekend, more or less. Had the opportunity to go to see an English old band called The Prodigy. That was definitely an experience. That was pretty cool. So that's also why my throat is a little bit messed up right now. I hope that's all fine. As always, guys, if you like the content, please follow me here on Twitter, on YouTube, and on the Substack. Every single one of them is at uselink.inv. So with that said, we will go through some charts, as mentioned, 3 days old, more or less. But first, I want to show you just so you can see what we are, if for some reason, oh, there it is, cool. Just very quickly here, we have tons of data points coming out this week. Tomorrow, we have core PPI, basically PPI coming out tomorrow. That's the big one. Then Wednesday, we have, where are you? Wednesday, there you are. Going down to the US of A, we have CPI coming out Wednesday. Usually we get the CPI first, and then the next day PPI. I don't know why they have switched them around. I have no idea. Thursday we have, where are you? There it is, initial jobless claims. And last but not least, Friday we have nothing major. So these are the big ones, and they are definitely worth, some value. I mean, the markets will react heavily to these numbers. So with that said, I'm gonna shut that one down. My PC is really slow. Okay, fair enough. Cool. Anyways, bookmarks, retweets for YouTube. Let's get into business here. As you can see, transpired here the 9th of August, 3 days ago. So this is basically last Friday. So we have the NASDAQ 100 futures here on the 1 hourly chart. The NASDAQ bulls need to push through those overnight highs in order to invalidate this bearish flag setup. So you can see they move down here sharp, going sideways. Volume node here at roughly 18,460. Again, I don't know how exactly the past, the Friday and this Monday has went, but I would assume we're above if my memory is not totally, thrown out the window. So potentially a bigger bear flag negation there on the Nasdaq. Here we have J, a chart worth watching. Hat tip for the all-star chart there. You can see the technology versus the SP 500, the XLK divided by the SPY. You can see here last time we were at these elevated, valuations when you measure the technology against the SP 500. That was the .com bubble. So definitely that should be a ton of resistance. I'm not saying that we cannot go higher, but usually when you have this mega rounded bottom, you need some time out here to perform some sort of handle or just to ease things a bit here. And usually I like to go with 1/3 or 1/4 of the duration. So we're talking 25 years. So, it could be like a 5, 6, 7 year, basically, like a handle there in the ratio. That's a bold guess, by the way. Sahara here, again, glad to have him back. Sometimes he's doing a lot of charts and sometimes he is, not doing a lot here. But finally, he's back here. Great to see. This is the GDX to SPX ratio. Inverse headed shoulders of the lower parallel. Still has to make its weekly 150 moving average. It's not shown there. Though holding its weekly 200 MA here, which is bullish, aligned with the 20 MA. So look out for a breakout. Now this goes back to the 2020 highs coming down here. And again, beautiful bottom here for now. I haven't checked the ratio, but again, I think the GDX is up like 4% today and the SPX is flat. So I'm definitely going to dive into that after this video here. But we could potentially see some big breakouts there in this ratio. Keep in mind we have a very strong resistance when you connect these highs here as well. But overall, that's it. This is a good start potentially, looking fantastic for gold. Gold is also doing great today. It's up 2%. That's pretty nice. The GDX here, the miners poised. I agree. We are so close to the golden land, you can say. At the break point of a large coil biweekly 11 to 20 moving average, bullish aligned and offering support. So we go back to the 2011 highs here, sharp move down. Again, now we're making the upper rail. The lower rail is formed by the move, down in 2018, excuse me, 16, and then we have the March 2020 low here, and now we have the internal, which I also have as a, that breakout there was a big moment in time, and we are pretty close to breakout here for the GDX. This is the Fibonacci measured moved, I would assume. And again, if we are to reach those levels, 250, again, in 2030, that's 5 years away. That's only 5 years away. And you're talking like an 8-bagger in the GDX. So can you imagine if you pick, if you hit the correct gold miners, the smaller ones, they will do even more. So pretty cool, and I agree we are very close here on the miners. Also doing really well today, as I mentioned, 4% if I remember correctly. Hedgehog Trader, again, this is a guy that I write back and forth with in the DMs. Really cool guy, worth a follow, 100%. Here he has a BUB. What's that called? Morality, unfiltered resources stocks, reach, and out of favor extreme. So you can see here, this is the, I don't know exactly what's meant by that. Maybe that's a copy from YouTube. But anyways, gold here, we're talking the GDXJ, breaking out of that, like we just saw before, that 4-year squeeze there, breaking out above the moving average. Looks fantastic. It really does. It looks absolutely amazing. Ole S. Hansen here, a fellow Dane, pretty cool. Having corrected about 20% without attracting any sort of short selling, only long liquidation, the copper chart is currently showing a falling wedge while the RSI is diverging, points to the downtrend exhaustion. Interesting week ahead. You can see here again, we turned bullish when we broke the $4 level for the copper, retesting, rallied into the $5, which we were our target, have come down a lot lower than I would have thought. I didn't think we would see the $4 mark that quickly, but again, we are seeing wedging patterns and a parallel channel here. So again, trying to find support here at $4. If we can break here the internal triangle there, again, we have some opportunities for copper, but it still needs to digest the downward pressure. But again, we could have made a bottom there at roughly $4 for the copper. Work here with a, work here with a similar chart. The GDX would be a perfect buy if it can break the golden major resistance at 39. Same thing again, the 2011 high connection there to here. I have to check where we are today. I don't know if we have broken. Hell, let's check it out. Let's give it a quick look here. The GDX is at, I have it on Renko, is at 37. So you can see we still haven't broken out entirely. But if we zoom in here on the 1 hourly, excuse me, the daily, now we're doing a little bit of technicals, even though we are only, you can see here the 3 impulse lower lows. That's a bull flag. That's pretty cool. Anyways, back to the business there. The gold miners looks primed for a 15-year breakout. But again, we cannot celebrate until we get that exact breakout. But it looks very good. And I'm always excited when Borax starts to post, similar setups that I have here. That's always gets me going. That's pretty cool. Rock bottom interest here. A lot of gold miners. This is from Friday. Gold miners are poised to outperform the S&P 500 after 4 years of underperformance. Again here, the ratio of the GDX divided by SPY. The high there in the 2020 downtrend. Here again, we have the inverted head and shoulders. Again, I don't know if we have broken. I will have to check that. Maybe I will, if I remember, I will do it at the end of the video so we can check together here on this Monday, where the gold miners has done really well. So that's pretty nice. You know, a lot of people are looking at the same ratios that I do. I love it. North Star here, Kevin. I know he did a recording today with Andy from Finding Value Finance, and also Patrick from Bad Charts, and Danny from Capital Custom. I was not able to attend. It should be out on YouTube any moment, so check it out on Capital Custom at YouTube. A little side note there, but anyway, you have the Dow to gold ratio, which is a very, very important ratio if you're talking, you know, money flows and all that, appears to be breaking down. And when he says appears, is because he has it on a 3-monthly candlestick. So, but again, we have broken the uptrend. We are basically at that big 16 ratio level. Again, I have to check that today. Maybe we have broken down today. But again, we need to see the 3-monthly close. Further confirmation would be a big boost for gold investors. Case in point, I agree. Nothing to add there, really. Again, the miners, the gold, it looks really good. Maybe it looks too good. I don't know, but it looks fantastic. Tavi here again. Tavi does not post a lot on Twitter. Maybe, you know, like 1 chart per day maximum. But when he does, I mean, it's always of great value. So here we have again the tech versus the resource sectors weighting in the SP 500 index. Excuse me. This chart illustrates the shift in markets leadership that we often experience over time. As Sam Selm once put it in, great money is made in businesses that lack capital interest, not the other way around. To be blunt, this is the case when a sector represents nearly 35% of the overall index. So you can see here the tech bubble again there with the informational technology, and then we have energy and metals completely down the drain here. So again, we are at not as, you know, elevated, you know, this is a huge move, but again, we are potentially blowing off here. So again, I agree. Commodities is, in my opinion, a better play. But again, these big shifts here, they take a long time to do so. I start here with that's some relative strength on the spot gold. You want to be settling alerts on mid, high cost producers and bottom end gold explorers going forward. We'll go through the watch list and post tradable patterns. Again, gold here has gone sideways for like 4 months, basically building up energy. Ideally, we wouldn't have these higher highs, you know, but again, overall, still looking good. Still looking fantastic. We do have that inverted head and shoulders target. I think it's 2,650. And then we have a longer term pattern actually pointing to roughly 3K. So we still haven't matched the longer term targets for gold. That's pretty nice. Silver chart is here, Steve Penny. URNM spot uranium miners. You can see here this is on a nominal scale here, back testing the 2020 uptrend line, risk reward ratio, not now skewed to the upside. Beautiful little trend line here, tagging it there. I think the uranium miners are up 2% today, so that's also nice. Again, we have come down pretty far. Again, I did not see, you know, this steep of a drop there, just completely thrown overboard there from $60 now down to 40. So we're talking a 33% drop. That's that's a big drop and steep. So Jay Hinster here with AG. We're talking First Majestic on a two weekly, what's it called, candlestick or time frame, basically at a mega support here, still holding. You can see it's holding down here at roughly $5. Insanely good risk reward down here, and the risk is obviously below, but again, where I think gold and silver where they will go, I'm very convinced that we are to see these highs again here, you know, $24 for First Majestic. I would be very surprised if we don't get to those levels, due to the fact I think silver and gold will be a lot higher, you know, in 5 years' time. Transpider, stop it. You're a good Bill? Question mark. That's Microsoft. Again, it's not the longest time frame. It's only in quotes, you know, 18 months. Still worth noting. You can see the breakdown here of that of that trend line there. So that's always, you know, concerning when you see that breakdown. I will say though that, you know, we've come a long way down. So I would expect support to be found here at that low, and potentially we make the head and shoulders pattern. But again, I'm expecting a bounce here before potentially rolling over for Microsoft. Jay Hinster again here with CCJ. I don't see Chemical below that support line, below 30, 35. So he's talking to that, you know, we are still looking good. And if you go to the log scale, it actually looks a lot better, to be honest. But again, great. You're coming into some levels here where Chemical has great value, for sure. For sure. Rashad here, gold to silver ratio is about to break down of a 5-week rising channel. So you can see here the perfect, more or less the perfect trend line here, excuse me, the parallel, and potentially some inverted head and shoulders going on here. Again, I don't know if we have broken down. I'll check that in the market, you know, quick recap update here after this video. Jay Fong here, again with the copper and the falling wedge and positive divergence on the daily. You can see the RSI, positive divergence, falling wedge into that, you know, roughly $4 support. Again, I'm convinced that we're about to see a move to the upside here for copper. Great to hear. This commodities bull market will be the greatest opportunity in your lifetime. Oil companies led the first phase up from the commodities bear market low back in 2020. Now they have broken out and are back testing versus general equities. Huge move there. Again, also note that beautiful. I followed the same ratio, by the way. Look at that beautiful bottoming there, the inverted head and shoulders pattern. It's just incredible. Coming up, mega bull flag here. On top of that, maybe it's, you know, misaligned slightly here. But anyways, we are holding, you know, just building energy, and I'm expecting again energy to outperform here, you know, in maybe not in 2024, maybe, you know, but at least in 2025, we should have actually outperformed this buy. Should, again, it's a long way to go. Grady, this very big picture ratio chart is now clear. Silver has broken out, plus its back test versus US stock market. Means a historical global asset class rotation is in the making. This will be the last precious metals bull, so vital to make the most of it. Silver divided by the SPX. Again, maybe a bit early with the call there, but I'm definitely also, you know, in the same camp that we are to see silver outperform SPX. I do think we just to confirm it 100%, we need to take out these highs here, but again, overall, I agree, you know, the next 5-10 years, silver will be a better value. The chart degen, there's a gigantic naked short position being run by multiple US and UK banks in silver paper markets. Higher prices will be forced these banks to unwind the position, fueling the move higher, eventually leading into a squeeze for the ages, with pricing possible reaching $1,000. Again, the overall long-term time frame, we're talking 40-year inverted, cup and handle. Just, you know, the move here to there, when I measure it at least, points to 600-700. So again, with overshooting and all that, you know, end of you know, blow off, end of move type, you know, moves, maybe it's possible. But overall, silver, I completely agree, looks incredible. And last but not least, here again, I just saw here Disney on the 3-monthly, just sitting at its golden uptrend here. You can see it zoomed in here, big support, you know, coming all the way over there. So again here, Disney potentially a buying opportunity here with risk below these levels here at roughly 79. Again, that's Disney for you. That's all. That was also a lot of beautiful charts. And I didn't forget, I just remembered we need to check. We need to check the ratio here with gold and silver. We'll just go quickly here. I can see here we haven't really broken down yet, but we are making lower lows and lower highs on the 1 hourly. So again, a bit too early to call the breakdown, But if we zoom out here, you can actually see the uptrend is breaking down, retesting as we speak, retesting into that 88, 89 level, which is also a big resistance now that we are below. So yeah, maybe some breakdown coming here, leading into all these news or data points that we're getting. But you can also see here that, again, it's still a mixed bag, right? We have a breakdown, yeah, but we're also having some sideways action here within a tight squeeze there potentially. So it will be 1 week to watch, that is for sure. That's it, guys. A long video. I will get going with the daily update where we just quickly dive into the scoreboard for the day. Again, if you like the content, guys, do as you may. Follow me on Twitter, YouTube, and Substack. Cheers, guys. Bye.